What is good, NIO family? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only NIO stock and what you should be looking after for the future. I'm also going to break down why on earth there is going to be some downside most likely to come to the markets very soon, because the earnings were horrendous. They were absolutely horrendous. Once you see them, it is going to likely lead to a big shift in sentiment and a change in the price action. So I have a very important warning for tomorrow. I'm going to break down exactly why, and one of the predictions that I made about the markets, why it actually might end up coming true, even though I did lack some confidence about it yesterday. Now, before I break anything down about this, before I talk about what's going on, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 5 free stocks, plus you'll have free level 2 data. And if you put in $1,000, you'll get 15 free stocks plus all the other benefits. It's a limited time offer. The offer ends in just 2 weeks. Check it out before they run out. With that out of the way, let's get on with the video. So looking at NIO, I mentioned to you guys, the first thing I did is I predicted that NIO would have a flat day and that we would stay between 11.8 and 12. That's almost exactly what happened today. We did push up a little bit, then we came down and stayed just about here. I told you we'd have a pretty flat day and we'd form a potential inverse head and shoulders like formation. But like I said before, the way we end up moving for Friday, whether this plays out or not, is going to depend on earnings. And earnings ended up being horrendous. So let me first talk about something I mentioned to you guys. When I was looking at SPY, I called out the fact that there were so many of these divergences that were forming. I think some of them did get invalidated, especially after this big pump. But you can see right here, we still have this massive divergence that formed during this entire run-up. So right here, the RSI was at a very high level, and then the RSI still ended up actually coming up to similar levels. Even during like these peaks, we had similar RSI levels. So it really showed a divergence that formed. And the point I'm trying to make is the negative divergence was suggesting to me that there could be a drop. Now, I became less confident about the drop because of Jerome Powell not being as hawkish. So I told everyone, look, the drop could still come, right? There's no guarantee that this rally is going to last forever. It could still come, but it's going to depend on earnings. So I told you guys, don't worry too much about today. Let's see what happens with the big earnings from Amazon, Apple, and Google. They could cause a big crash, or they could cause the market to continue pumping. And that's what I said. And I wasn't sure if we'd end up crashing or not. I did warn you guys earlier about that being a possibility. I was more confident about that way earlier. And now it's basically happening right now. The whole market is read in the after hours. And we just had earnings. They came out and they were a disaster. Let's actually break this down. So for Friday, we have some unemployment data coming out. I just want to note that it's not going to be as significant, but this could contribute to more potential downside if unemployment is still too low. I just want to note that the market wants some pain. Additionally, the earnings came out, and when you see this, it's not going to look good. Amazon earnings, least profitable holiday quarter since 2014, the biggest annual loss ever as a public company. More misses, operating profit declined, first quarter forecast misses, Amazon stock falling, it's down 7% at the time that person tweeted that. Looking at Amazon, let's look at some numbers. They actually beat on some Q4 net sales. They missed on earnings per share, only 3 cents versus 17 cents expected. They missed on, online store net sales. They missed on Amazon Web Services. They ended up beating on operating income, a few beats, but the large majority of them are misses, missing on earnings per share. I think the revenue was just okay, but for the most part, they had many, many misses. Guidance was not looking that good. Then we have the second big dog, and that's Alphabet, aka Google. And what happened? They missed on almost everything. Earnings per share, $1.05 versus $1.18, a miss. Revenue miss. YouTube advertising revenue, a miss compared to expectations. Google Cloud revenue was a miss. Traffic acquisition costs, another miss. They missed on almost everything. Not looking good from their end. Not the best for the market. Missing on earnings per share. Missing on revenues. Now we have the big dog, the biggest of them all, Apple. How did Apple do? Well, another sum of massive, massive misses. Their sales dropped 5%, largest quarterly revenue decline since 2016. Earnings per share miss, revenue miss, iPhone revenue miss. Mac revenue was also a big miss, down 28%. iPad revenue was a beat. Other products revenue miss, and almost everything was a miss. They did actually meet on margin, but pretty horrendous. They missed pretty badly. I showed you guys this chart. I wasn't as sure if this would end up playing out. I told you guys when we start to see the prices go up in like assets like the S&P 500, right? During the last 12 to 14 months, when this would happen, what tends to happen, especially during the major rallies, especially more recently, smart money, also known as institutions, they end up losing confidence in these massive rallies. They start selling, and then dumb money, which is actually referring to like retail, they become super bullish. Retail was so bullish right here. They're so bullish. They're so confident the market was going to explode and go to all-time highs, whereas institutions were not in the same boat. They were not feeling the same way. We had this massive divergence that formed. I mentioned whenever these divergences formed, the market tended to peak. Just like right here, for example, we had the peak here. Retail was buying. Institutions were not confident about this, and then we dropped. At the bottom here, same thing happened, this big divergence. We ended up pushing up. Another divergence, we came down. They were kind of on par like right here as we started pushing up though. Huge divergence, and we're likely going to come down. I didn't know for sure if this would play out, guys. I'm going to be honest, because I thought Jerome Powell would be the one that caused it. It wasn't him. He was actually pumping the markets. But the big misses in earnings right now is causing the market to come down pretty hard. It's going to likely lead to some more selling, and this could get worse depending on the future. But I do believe the market peaked, and we are going to start heading down now. I do believe it's likely going to happen. This will likely drag NIO down. NIO had nice volume, but we did end up closing kind of red. So now I want to break this down. SPY is down about 0.65%. The QQQ is down a whole 1.5% in just the after hours alone. We're going to come down to fill this gap, in my opinion. Man, that's a pretty big drop. And then we do have more downside after that, in my opinion, too. Apple is down almost 4% in the after hours. Amazon is down almost 4%. Let's see if I can find Google, or also known as Alphabet. Google is down 5%. Google has a massive gap that's going to get filled. Man, Google is going to come down. Apple coming down is going to drag the market down. SPY is likely going to start heading down pretty hard. I see SPY, in my opinion, I think there's a gap that formed here around this 410 area. We're going to come down to 410 and even lower. Maybe come all the way back down to 400. Maybe even lower, depending on other factors. NIO had a potential inverse head and shoulders like formation playing out. I don't know if NIO is going to get some big news to fill this gap first and then come down, or NIO might just start coming down from here if it breaks below 11.8. If it breaks that and fails to hold it and fails to bounce at 11.5, the low 11s could come. We could start filling the gaps down here in the low 11s. Then we have, I think, 2 gaps in the 10s. And yeah, there is likely going to be some downside. So I want to warn everyone about this. Do we have this gap up here? Sure. We're either going to fill this gap first to the upside, maybe NIO gets one last pop and then we end up coming down, or we just start bleeding from here. Please be very careful. In my opinion, it's a little bit more likely to see NIO start to come down because NIO was still red when the market was green, showing some relative weakness. Please be very careful. I just want to warn you guys about this. The zone to watch is 11.8. We got to bounce off 11.8. If we fail at 11.8, watch 11.5. I mean, we're likely not going to bounce if that ends up being the case. And then we could come all the way down to the low 11s. So I want to warn everyone, earnings were a big miss. Earnings were not great. Not the best for NIO, not the best for the bulls. Thank you all for listening. Have a great rest of the day, and I'll see you guys in the next one. NIO to the moon, because the long-term future is still incredibly bright, and peace out.